now losing out completely. There are hardly any winners in the session today. Well, we finally have Dilip Bhat as well. Let's just get to him for a quick view as well. Dilip Bhat, thanks so much for joining in, and thanks so much for waiting by patiently for us to come to you. Just wondering,
not at all, not to worry.
What would you be advising your clients to do right now? I mean, is this the dip that you would have been waiting for, telling your clients to buy, or do you believe this dip can extend itself further?
Good question, Neeraj. You know, when the markets are rising, you're always waiting for a dip. And when the dip comes in this particular fashion, it really leaves you a lot more confused. Surely, I think things are in a state of a flux. There's so many moving parts out there in the international scenario at the moment. You know, everything is all over, whether it's a rupee, whether it's falling oil, whether it's collapsing demand. And you know, typically in a bear market, when this kind of correction happens, you hear all kind of horror stories coming out. So surely, I think taking a ratio of all this into account, I think I would still wait for a while, not be in a hurry to really invest at the moment, because I think the verdict is still not out over there, not very clear at the moment that what exactly is happening. And people have that Lehman Brothers memories very fresh in the mind that, you know, what happened during that time. So I think the fear factor is all pervasive at the moment. So my own senses and my own advice, which I've been telling is, let's wait for a while. Even if it rises from here on, not to worry. I think let the markets stabilize a little more, maybe at a slightly higher level. Let us make a little more sense out of it before we really become a little more, you know, adventurous to go out and buy the stocks.
Dilip, I'm so tempted to bombard you with questions, but I'm afraid we just have to wrap up the markets quickly before we do that. So that's the final tally for you. The advanced decline ratio clearly in favor of the losing side. It's been an awfully volatile session. No doubt we've recovered from the day's lows of 79.61. 8,000 has been maintained. 8,020 is where we're shutting shop. For the Sensex, off by almost 100 points, 26,682. In terms of sectors, well, the biggest laggard is nothing but healthcare. Auto is second in line, followed by real estate, FMCG too, not too far behind. On the upside though, it's metals, oil and gas, PSUs, and very commendable recovery on the bank Nifty futures as well, smartly from the day's low. So some of the big index losers then, we'll just pull that up for you. And you do have the likes of some of those rate sensitives and Asian Paints, DLF, Kotak Bank, as well as Lupin and ITC, they've shaved off close to 3%. Bharti Airtel, Hero, as well as Sun Pharma go down in the red. Clearly, your saving grace is metals, so Sesa Sterlite, Hindalco, NMDC, Tata Steel, those managed to hold out. SBI2 and ONGC providing quite a bit of support.
Pharma's had an off day. Wockhardt showing that, so 10% down for that one. VF Utilities has lost about 9.5%, though off the lows of the day. KC International about 8%. The tire space has been hammered down, so be it MRF, JK Tire, Apollo Tires, all of these are down. And the media pack has had a really bad day. So Eros International Media amongst them, but Hathaway, Jagran Prakashan, and I think these names too have gone off. Treehouse Education in the midst of fundraising down close to 5% in trade, and logistics haven't had the best of days. GST or no GST, these stocks have been clobbered out of shape today. Gati down 245, not good going for that one. A couple of winners, really, handful of them. GE Shipping, stringently of 6% up, Aban Offshore about 5%, and some gains by HCL Info in the session today. So that's the other one that's held out. I think the markets have just shut shop, and on close, we have the Nifty down about 0.5%, Sensex down about, or rather, 0.5%, Sensex down 100 odd points, and quite a bit. I mean, it's a much better tick than what it was looking like at a point of time. 0.5% down for the mid caps and about 1.5% for the small caps. But Dilip Bhat is still with us. Let's take it back to him. So, Dilip, what would you do? Let's say there are your clients who have some money in order to average out. What is on the shopping list, and when do you tell them to go shopping? Do you wait maybe for some more time, because the way global markets are looking, it's probably looking a bit sketchy. FOMC notwithstanding, they might still see some bit of a downtick. Would you wait for that downtick to come?
Neeraj, I think yes, as what I just said some time back, that things are so much in a state of flux, the fear factor is so much ruling at the moment. And I'm sure this kind of correction would have shaken even the most optimistic of the retail investor who has got in or who was planning to get in at the moment. So I think I would, and if I were to just rewind a little back, right from the time this last February, March, one has really invested in the market, one has invested, one has bought. So it's not as if that one is not invested even at the current levels. One is very adequately invested even on the, based on the recommendations. So I think there will be clients who will still have a possibility to average, but I would say that no, I think one should hold on. Maybe, we'll have to reclassify what really looks good, because not to forget, Neeraj, that the stock prices were significantly ahead of the valuations. And that was based on the optimism. Now what we have to revisit is whether this optimism still remains, whether the next 2 years growth still remains intact in view of what is happening in the world, and whether this fall in the international scenario which we are seeing of the commodities and of the stock markets, whether it is a symptom of something more really dramatic, demand collapsing over there. So, all those factors we need to really once again revisit a little closely rather than be in a hurry to try to buy. So my sincere advice would be that just wait for a while. I think a further slide, if it's possible, I think yes, it's very much possible. That can further really compound the matters. So all said and done, I would say just wait for a while, don't be in a hurry.
And Dilip, another cue that we'll be watching out for would definitely be, apart from what the US Fed does, will be clarity on GST. How does this change things for us, and what would your advice be in terms of approaching the markets once we garner more clarity?
Well, there is no doubt that GST in the normal course would have received a lot of, would have provided a lot of tailwind to the market and to the sentiments and to the reform process. So it's good that it's going to happen sooner than what all of us are thinking. So, if everything goes well, then maybe by April 16th, we will have this GST in place. But more important is the passing of this particular bill in the parliament, which will enable the other states to really pass that particular legislation. So it's a huge positive for the government, because that reform process, which was there on the anvil now for some time, even from the previous government, would really happen. So I think some of this will still be taken as positive. But the real thing which everybody will now be waiting and watching is, amidst all what is happening around the world, is India really going to grow again? Like whether we are going to go back to 6.5–7% GDP growth rate amidst what is happening. So I think that is what people will be watching very closely before really trying to commit anything further in the markets or in terms of the comments.
Great. Okay, Dilip, understand we have extended our appointment with you, but thank you so much for waiting by as well. Really good having you as always, and look forward to have a more fruitful discussion with you next time. Thanks for joining in. That's the view from Dilip.